All right, hope everyone's doing well. So I wanted to make this quick video really over this section of Al's price action, and it's labeled extremely frustrated. And you can see this person is, I mean, yes, they're questioning Al's method, but really what they're doing is, I get it. Because I've questioned these 1,000 times, but if we just read this right here, it's basically saying, hey, is Al true to what he says, or is he just full of it? And what I can tell you is this. I'm in a car, by the way. I'm not driving, but just wanted to make a quick video. And I really don't know. This is going to be more of an audio video and not many examples, but I really don't know a better way than posting it on YouTube. So if anyone does, let me know how I can post an audio clip. Anyways, so I can tell you this. And this person, he says, is anyone really profitable using Al's method? I just don't see the validity, examples, if a breakout is followed through, get in for any reason, works less than 50% of the time. He says, and really all of this, to Doc Bear, if you're listening to this, you have a few things mixed up. So I know the course is really, really long. Don't jump off the cliff, as you just said, but you need to spend more time with the course. One thing, I've been studying Al since probably June or July of 2013. So about going on 5 years. And I can say it's been a lot of work, but if you stick with it, what he says makes sense. So for anyone that's trying to figure all this out, the first thing you have to do is study. And study and study and study. And you got to trade along with studying. What I would say is, I think one thing that helped me a lot thinking back is I had Al's original video course, the 2014 one. I had his books. Really, it was studying the video course, and I spent I spent probably 3 years practicing, simulated accounts with the E-mini alongside listening to Al talk for the whole day. And I was fortunate enough to be able to get to listen to Al. Sorry, the car's on. I hope it doesn't bother anyone in the video. But yeah, I was fortunate to get to listen to Al during the trading room for, 3 years, 3.5 years, maybe 4. And, I will listen to the trading room some. I'm still subscribed. I've subscribed monthly. I always listen to the end of the day. So at 3 o'clock my time, Central Time, or, 1 p.m. Pacific Time, Al's time. But I promise you, the amount of questions I've asked in Al's forums to him, where he allows the one question a day, I don't know how many questions I've asked him, probably 300, if not more, way more than that. I've asked him tons of questions in the trading room. I've taken a lot of trades and I've lost a lot of those trades. However, somewhere through all that, I begin to find more and more, hey, what works and what doesn't work. So, to Doc Bear, if I could go back, the one thing I would do is say, hey, you got to trust Al's system. You got to trust that what he's saying works. And I know Mastercraft over here, which he's been in the room for some time, he broke it down within this post, and I'm not going to, I'll scroll through the few, but you can find this in the trading discussions in extremely frustrated form. Anyways, Mastercraft's right. you're competing against some of the smartest people in the world, and 300 hours is not a lot in the grand scheme of things. It's just not, you know. I know Doc Bear, and there was a post over here about this person mentioned that they're 1/6 the way through the course. This person saying that way too many videos repeat the same things, and that's not a good thing. And it is a good thing. And I think the more you watch the course, the more you'll begin to see why. The first thing I could tell anyone to do, if you feel like the course is really redundant or it's contradicting, the first thing I would tell you to do is this. You need to watch, some videos I've probably seen 30 times. Other videos I've probably seen 4 times. But I've even made, I can tell you right now, I used OneNote and I actually screenshotted every slide in the video course as a reference. And I'll often just quickly scroll through it. But I can tell you this. Start with the fundamental videos. Start with, candlestick setups and signal bars. And really, really make sure you understand signal bars. And there's always going to be pieces you miss. So, if we're looking at this, here's the SPY. Well, if I'm looking at this chart, first thing I see, ignore the moving averages, ignore all these lines. But hey, we're rallying above, on the open of today, we're rallying above. First off, we're going sideways, so trading range price action. We're breaking above these highs. First, so here's a low one short, so failed breakout of yesterday's high, then a second failed breakout of yesterday's high. Well, maybe 50-50 chance high of the day, so reasonable swing short, clearly always in long, second leg down likely. Here, the problem right here may be 50-50 chance you get another leg down. However, this is a situation where you heard Al mention here at the end of the day that, and again, if you're not in Al's trading room, I really don't think you're giving it a fair chance. But he mentioned here that no matter what, 80% chance that we'd come back to this high, even if we sold off, as long as we stayed above these lows or above this low. Well, same thing here. If we fall below these lows, bulls will buy. So a lot of traders will buy here and not get out here and buy more above a bull bar. And that is why this bar sold off right here. 3 consecutive, Al talks about parabolic wedges. Well, this is a parabolic wedge. 1, 2, 3. It's a double bottom, second and true buy. It looks like a leg in a trading range. Gaps are closing. I'm setting a lot of stuff. Consecutive buy climaxes. Big down, big up. Well, is this a V bottom? I know this person in the forum was saying that Al says V bottoms don't exist, but he points out a lot of V bottoms. And, I apologize if I got that wrong. He says there are V bottoms once or twice a month. I see 20 of them. Well, you may be seeing things like this. This is not really a V bottom. It's consecutive sell climaxes. V bottoms, when Al says a V bottom, he talks about, a move down and a sharp move up that's very sudden. But ignore that. All throughout Al's course, if you go to the climax videos in the reversal section within the fundamentals, you'll hear him talk about consecutive sell climaxes. When eventually there's nobody left to sell, so we have to rally. Well, so you got to spend time. It takes a lot of work. For one, what I would do if I was starting out today, I would grab Al's course, and I don't know, maybe I would spend just an incredible number of time. And I would not just watch the video course once through. I would breathe it almost. I would watch it until I know every slide almost by heart. You got to think, there's a 95 hours in the trading course, 93 hours if you include the the Forex course. So, it takes a long time. I started trading a lot of Forex about a year ago. Well, Forex used to be very frustrating to me. I would look at Forex markets, hopefully to load, and I would see this isn't a good example. TradeStation just is acting weird with the dollar Canadian. But anyways, I would look at Forex on a 5-minute chart, and I would think, sorry, one moment. And I would think, gee, let me go to a kind of a dead zone. I would look at this and go, how can anyone make money? The range is so small. But then I started saying, okay, what if I trade more 30-minute charts? It became a little easier. So I know I'm jumping all over the place, but the first thing I would tell you is this. Start with something simple. You're going to lose money. If you're trying to make money and you're just now getting into this, it's taken me 5 years. Since 2013, I've been studying now. And just now, this year, I'm starting to say, okay, I'm starting to see more and more light at the end of the tunnel, saying, hey, I can do this. I do know what I'm talking about, and it's really, really starting to make sense. But with that said, excuse me, with that said, I still have a lot to learn. However, it's easier and easier and easier now. So here's some things I would recommend. Number one, get Al's course. Study Al's course, learn Al's course, and when you feel like you know a decent amount, join Al's trading room and start trading. If you have to, trade simulated with the SPY. If you can afford to trade the SPY, that's great. If you cannot afford to trade the SPY, do not trade the E-mini. I think if you can, I would only trade the E-mini if you can trade simulated and afford the cost to do so. It's a great learning tool to get to trade side by side with Al, but the risk is too difficult starting out. I'd really recommend Forex. So the first thing I would do is keep it simple, don't scale in, study Al's course, and know there's going to be probably 100 and something times you're going to say, hey, I've studied a lot, I know what I'm doing, I'm going to trade. You're going to have a really good week, maybe a really good few days, and then you're going to get punched in the face, and you're going to feel like you're back to square zero and you know nothing. Well, when that happens, the best thing you can do, stop trading for a little bit, maybe a day, maybe a week, maybe a month, and just start pounding away at watching videos. Just do something. Study. The more you look at charts, the more you study Al's videos, the faster the learning curve. But you got to study. So, with all this, the easiest, I can give a few examples with maybe a form of always in trading that I like to do, such as, okay, wait for stop entries, wait for breakouts. Well, big bar 1, it's a buy. However, it's high in the range, far above the moving average, so it's expensive, so it may not go high. Outside down, follow through, probably always in short, but again, gap up, probably going to find value somewhere down here, and bulls will buy. So here's an easier example. Second entry short, failed breakout yesterday's high, reasonable short here, 4 consecutive bear bars, probably always in short. This bull bar is not enough to erase these 4 bear bars, probably going lower. Very big bear bar, possibly exhaustion. However, we've got a negative gap. This body, this closed below the bodies of these bars. So even though the tails overlap, it's negative gap. If you look at Al's course, he talks about that. Here, reasonable to get out of longs, may get a second leg down. It's very dangerous to be selling down here because of this reason right here. Bulls are looking to buy X number of ticks below these lows. So you got to think about that. Somewhere in here, starting to find a lot of buying pressure. Bears who sold this low close had a chance to get out here, then they got trapped, and they got trapped. So anybody selling and scaling in higher, if they didn't get out quickly, they got trapped. And here's the breakout, and here's the measuring gap. And as you can see, we got a measure move up. Let me go to some other days. Let me just find a random day. Here is April 26th of this past 18. Well, gap up looks like a bull channel, so gap up, maybe a measuring gap. It's always in long based upon the gap. Second entry buy, bulls will buy. I wouldn't put a stop down here. I'd probably use an arbitrary stop a little bit below to give me some room. Consecutive bull bars, mini bulls up, bars up. First reversal down should fail. More up, 3 pushes up, 1, 2, 3, or 1, 2, and 3. Maybe a parabolic wedge top, however, tight enough channel, first reversal down to be minor. And the best, which means, again, if you notice Al's course, minor reversals, bear flag or bull flag or trading range, not a bear trend. A major reversal implies an opposite trend. Looks like a leg in the trading range. Bear bars, bad follow through. Bear bars, bad follow through. Bear bar, bad follow through. 3 or 4 pushes down. 1, 2, 3, or 4. Or you can say 1, 2, 3. We have a gap bar. We've been 20 bars or so away from the moving average. We're finally below it. Bulls will buy, maybe for a final flag up. Tight enough bull channel. Never one always in long here, or always in short. Maybe forming a broader channel. Bulls will buy, tight enough channel, first reversal down to be minor. And look what happened. Do you think the bears that sold, betting on some sort of major trend reversal, got trapped? The bears got trapped in the market. Bulls got trapped out, so they used any pullback to get in. So it's basically a small pullback trend. Bull trend, you can say consecutive tops. Here's a top, bull breakout, another top up. Anyways, no reason to short through here. Maybe you get out a long somewhere over here late in the day. Probably not much to do. Second entry short, double top, bull trend line break. Second failed breakout of yesterday's highs. Reasonable to get out of longs or go short. Strong breakout, bad follow through, second entry buy. You got to understand the context though. Yes, it's always in short, but you're low in a range. Bull channels typically evolve into trading ranges, not bear trends. So bulls will buy. And strong enough sell-off that a bull trend is not likely. Think about a daily chart. If the opens here, we're down here, that would be a very big tail, and we'd have to get a very big bull body up here. So trading range most likely. Big down, big up, big confusion, sideways. Bulls wanted some sort of higher low major trend reversal. Bear trend line break, higher lows. However, we're already in a bull trend, so it's not really all that great. And you can see bears tried to get a double top, major trend reversal, and as most major trend reversals do, went sideways. So, guys, markets, if you listen now, he knows what he's talking about. But again, it's a ton of work. So, I'll look through some of this. I'm not I guess where Mastercraft and I differ is, he says a lot about psychology. I think that's good. I never got really into the psychology of trading. I think it's interesting, but from my perspective, I kind of agree with Al in the sense that computers dominate the market. Therefore, I don't like to think too much in terms of psychology, because computers are thinking about risk, reward, and probability. So if I get my trade station open, computers are thinking, okay, tight trading range, bear trend, bull breakout, 50% pullback for the bears, measure move up for the bulls. So we'll probably have to retest the open of the day. So computers will look to sell X points or ticks above the open of the day, stop a measure move up, betting price comes back to the open of the day. I like to think of it as a computer. All of this. One thing I also like to do, on a side note, is think about line charts. This is what traders trade. Computers think about this. Okay, so strong rally at an area where we sold off, so we're at a point of resistance. It was expensive up here, maybe expensive again, we'll sell off. Well, down here, bulls bought strongly, we came back down to it closely, bulls bought strongly. If we fall below it, bulls will buy again strongly. I would love to talk more about this, but I've got other things to do tonight, and it's getting a little late for me. So, if anyone really wants to, I'm happy to talk with anybody and give a little bit of time. If anybody does want to speak to me about all of this and maybe what I just kind of, because I've been at these frustrating points. Now, I've also had help from other people that I could talk to about this and get to learn more and not have to think it all through myself. So that is why I like to think about, I'm certainly not Al, but I do feel like I'm certainly in the right direction of where I want to get. So if anybody wants to talk to me about, maybe have a Google Hangout session for a short period of time, I'll be happy to talk about any sort of trading related discussions. I'm not, I'll be happy to discuss anything that relates to Al in terms of trading and share my input. But either way, so reach out to me, send me a private message on Al's price action group, or I guess send me a message in Al's price action group. My username's BCWOLFF. So really, whether or not you want to speak on a Google Hangout or not, the best thing I can tell you is you got to be persistent with it. Even you're going to have losing days. You're going to have days where you don't understand it all, and then you get just sucker punched in the face. You got to get up and study some more. So the best thing you can do is study Al's videos. The sooner you just accept that, hey, he knows what he's talking about, he's credible, the better you're going to be. But I get it. It's hard to say, hey, how could I trust this person with my dreams of becoming a trader? Well, you got to pick somebody. So if you're asking me, at least you should, you have a total of, you have 95 plus hours of video course material in front of y'all. So start learning it, start studying it. And for all of you that think you're going to be able to watch the video course once and know what you're doing, you're wrong. Like I said, you may have to watch the course 20 times. But it's simple. The person who studies more in the short run is going to be better off. So study, apply it, look at charts, and you'll get there. So with that said, I know it's frustrating, and is knowing too much a curse? Absolutely not. The more you know, the better off you're going to be. For example, well, why is selling down here a bad idea? Strong breakout, but it reversed. Well, why? Well, possible second leg trap, low in a trading range. You have bears that they sold down here, disappointed. They're going to look to buy back shorts, knowing that it was a bad place to bad place to sell. Lack of consecutive trend bars makes me think maybe we'll get up here, but we're probably not going much higher. And I don't know if that's the end of the day, but we gapped up. Strong breakout, may test up here, but again, big up, big down, big confusion, trading range. Look what happened. Strong bear breakout, but closing this gap, testing support. reasonable buy. Second entry short at resistance, open of the day. Bulls get out, bears start selling. Strong bear breakout, probably going lower, maybe measure move down, may have to retest these lows. Second entry buy. Some bulls will get out, but probably minor. We may have to this was a reasonable place to buy. We may have to retest it. 3 consecutive bull bars. Probably, even if we fall below here, we'll start to go sideways and form a bottom. And as I said, even if we go below here, probably have to go sideways, form a bottom. Probably always in long. 3 pushes down, so parabolic wedge bottom, 1, 2, 3. Parabolic wedge bottom just means consecutive climaxes without much of a pullback. So possible double top bear flag, maybe 40% chance we get a measure move down, but this is difficult. We may not test up here, and you have to be thinking, what do you do down here? Well, for me, I'm not willing to sell, but again, always in short. You may not want to be long yet because there's the risk of a strong bear breakout. And if this is a measuring gap, this could be a very strong bear trend. So again, 3 pushes, 1, 2, 3. Again, some bears get out, but probably a minor reversal after this many bear bars. Stops either here or here. Bulls probably need at least second entry buy. And look what's happening. We're not getting it. So that is the risk you run with all this. I said, again, probably won't go much below this, but look what happened. Look over here. Bulls couldn't even get back up here. This is not a great place to buy, but it's buying pressure, buying pressure, buying pressure, buying pressure. The odds favor the bottom. However, the move down was trapped a lot of bulls, which was why we probably got a measure move down. Just out of curiosity, look at that trend. I slightly remember this day, but I kind of forgot about it. But yes, so all these bulls, the bears ended up winning, and we got a measure move down. But you got to be very careful about this. You got to be careful. Bad buy. So if we're always in, bulls buy, bulls probably get out, bears start selling. It's probably a minor reversal. If bears get out, they got to get short again. Here. They probably get out. I'd look to sell again. 3 consecutive bear bars. Bulls probably do not get out here. Bears probably do not get out. If they do, they got to get short again. And then this was the give up. So incredible day. But it's all just price action. All right. Thanks for listening. If you have any questions, or if you'd like to send me more of a private message, just send me a private message in the Brooks Price Action. I'll try and get back to you when I see it. You can leave a comment in this video that I'll upload. So yeah, let me know. I'm always happy to talk about this. It's a lot of fun for me. It's a lot of enjoyment talking about it. Just a few more things. Strong breakouts always look like they're going to bottom, but they can just melt away, and you can just get killed trying to pick this bottom. Never do it. Here, this is probably a reasonable buy. For one, we've been away from the moving average for like 40-something bars. Big bars, biggest bear bar late in this move. You're later in the day, so probably we get some profit taking. But you got to be careful. It's a buy, but it's a scalp. And that's what I meant by scalp. It's a scalp. Bulls buy, scalp out. I know this because price went to 30, and then it went to 51, 52. So think about that. What does that mean? Well, if you're a bull who bought this high at 93, that means you got in at 95. You got in at 94. So you need price to go to 5 because you need an extra 2 ticks. So if you think about it, if price went to 4, price went up exactly right here. Well, actually right here. This high was 5. So if you think about it, if you buy above this bar, you're in at 94. it went up exactly 70 pips. If you think about right here, this probably went up to 40 cents. So bulls bought, scalped out 50 cents, scalped out for more. 2 legs up, but bear sold. And that's kind of, I don't know if we went below this low. This is another common mistake late in the day when you buy above it. If you're going to hold below here, don't get out below this low, because very good chance it'll trap a weak bulls out and just race back up. And you can see, pretty decent rally, but second entry short. Odds favored a minor reversal into a trading range. And yeah, but it all makes sense. So, hope this helps. Comment if you have any questions. And study. Hope you